Hey guys, in this video we will have a look at the valuation of Novo Nordisk using this Nordic Graphs tool. The basic idea in this tool is that whenever the black line, which is the stock price, goes below the orange line, which is the fair value line, that might be a sign of the company being undervalued. And when it's above the orange line, the company is overvalued. Of course, this is just a rough guideline, but this is based on the earnings of the company. So we have here 10 years of history for Novo Nordisk and the earnings per share for all of that time. And we can also see the growth rate for each year. And then we have 3 years of forward-looking estimates from analysts. Novo Nordisk is a Danish pharmaceutical company, which is known for weight loss drugs, a bit like Eli Lilly, and that's their biggest competitor. And it seems that here people got a bit too excited about the company and the valuation grew very high. We had a P ratio of 44 and even higher at times. And during this 10-year period, the stock traded between the blue line, which is the normal P ratio calculated from the history, and the orange line. And now recently we have seen prices which go below the orange line, and that's an interesting opportunity to do some research on the company. So valuation has a huge impact on what kind of gains you get. So for example, if you would have bought here at 900 Danish crowns and then valuation would return to this fair value line, you would have made an annual loss of 18%. But comparing it to the current price, which is around 240 Danish crowns, and going from that price to the fair value line, if the analyst estimates are accurate, this would be a 17% annual gain. So it looks quite attractive now. And even though Novo Nordisk is facing certain risks, and we can also see that the estimates for 26 are lower than for the year 25, and the growth for the next few years after that are estimated to be very low. That's of course one reason for the price drop, but there are other reasons as well. So with pharmaceutical companies like this, there is the kind of patent cliff. So some of the GLP-1 era drugs which Novo Nordisk has, they have patents expiring. For example, the international patents already expired for China and India, and there are already copycats or copy drugs being manufactured over there. The US patents are still in force until 2031, and my understanding is that some of the new drugs maybe haven't performed as well as investors would have hoped. And of course there's quite a bit of competition from Eli Lilly as well. So I could argue that the price drop is due to the earnings potential dropping and also the risks which Novo Nordisk is facing, but there's also a chance that the price drop was already too big and now might be a good opportunity to buy. If we check the analyst estimates, we can see 37 analysts, with 11 having a buy rating, 23 hold rating, and only 3 sell rating, and the average target price is 306 crowns. So if we check the chart, that 306 crowns would be, well, around the fair value line. So there definitely is potential for Novo Nordisk, and you could argue that the 15 PE valuation is too low and it should be between 17 and 20, but even with a 17 PE valuation, the earnings potential looks quite nice, 22% per year. You could also argue that there are too many risks with Novo Nordisk to invest in it, and you might think, well, if investing in the pharma sector in this weight loss industry, then you could say, well, Eli Lilly sounds better as a company, but we can have a quick look at that as well. So having a quick look at Eli Lilly, we can see that has been trading at a lot higher valuation. The normal PE is 56. Of course, it has had nice growth here, 102%, 96%, and even 50% estimates for next year's growth, and then slowing down a bit. But I would say that 56 PE ratio is too high. If we would use the growth equals PE and just looking at the future growth, maybe we would say kind of being conservative, going with bit lower PE, saying it's 25, then we could check that we would have an 11% rate of return, annual rate of return. And we can see that we are kind of overpaying with that PE valuation. If you think the growth is faster and remains faster, and a 13 PE ratio would be realistic, we can still see we are overpaying currently for that valuation, but the annual returns would be 19%. So Eli Lilly and Novo Nordisk are quite different type of companies. One is growing fast currently, the other one is struggling, but the valuation is also a lot lower. If you like this kind of analysis, please give the video a thumbs up, and if you're interested in the tool, go check it out at nordicgraphs.com. There's also a discount code if you want to check out the pro version. Thanks for watching.